Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Looking at stocks overnight, we've got them in the green as the Dow Jones Industrial Average jumped 598 points or 1.4%, and that closes at 42,583. The S&P 500 higher by 1.8% to 5,768, and we have the tech-heavy Nasdaq outperforming, gaining 2.3%. And all this as there seems to be some sense of optimism that President Donald Trump may hold back from implementing some of his wide-ranging tariff plans. And so the U.S. could skirt an economic slowdown from a protracted trade war. Let's check in now with chartered market technician Mark Newton. He is the Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, great to have you on the show. How are you doing?
Good morning, Ryan. Thank you for having me.
Hey, lots going on in the markets these days, especially as we count down towards April the 2nd. Walk us through where you feel markets are heading towards right now as we navigate all these choppy waters.
Yeah, thank you. The recent price action has actually been quite encouraging from my standpoint towards thinking that we are, in fact, creating a very meaningful bottom in the U.S. stock market. So I know that many are awaiting April the 2nd, but my thinking is that prices are turning up well ahead of that, and it is important to pay attention to what's going on. So specifically, there are a few things I'm looking at that I think are important, and the fact that fear got as high as it did with equity put-to-call ratios very, very high into mid-March. That was followed by some of the best back-to-back consecutive days of breadth that we've seen in the last couple of years. So normally that is a loud, alarm bell that rings sometimes at the bottom to say that there's a good likelihood that stocks could be bottoming out. So recently, in recent days, we've seen technology come back with a vengeance. Last week, we did see momentum gain in favor, and that showed particularly signs overnight of doing quite well. So great movement out of technology. I think we have bottomed. I think we're going to start to push higher in the weeks and the months to come. So I think there's really a lot of time for optimism at a time when the investing public is still quite pessimistic.
Yeah, let's expand on that optimism. So we did see the S&P 500 falling into correction territory earlier this month. And then last week we saw it rising and snapping a 4-week losing streak. Walk us through what you're seeing in terms of the indicators when you say maybe things have bottomed out for S&P 500.
Sure, that's fine. So, basically we did get to near-term oversold territory. I don't agree with the traditional meaning of the market's now in correction territory. I mean, that's largely just a number, and it really has very little bearing as to whether stocks can move up or down. So, oversold conditions, rampant fear was present. I think that's important. Very good breadth off the lows, very good volume into advancing issues. That was early last week. So those are all important, combined with the fact the VIX actually peaked out about 2 or 3 days prior to the market bottoming on the 13th of March and started to turn down. That was very interesting, along with consumer staples. So when these fearful type sectors start to really show outflows and turn down, that's also usually a very important sign for investors to pay attention to, that equities could be bottoming. Yeah, so we couple that with, of course, today's news that, Trump might do targeted tariffs. And, of course, the PMI came in, the services number was much better than expected. So, as I always tell investors, please do not pay attention to politics as a way of trying to time the market. And it's almost much better to await actions than it is to just react based on what you hear, because that's rarely the proper strategy.
Yeah, Mark, it does look quite tough these days to navigate the markets because the headlines can swing either way at a drop of a hat. And looking at some of the sectors that have been performing, technology, financials, and to some degree, this reflects risk appetite coming back into the market.
I think that's 100% correct. And the one point I make to investors is that when you look at intermediate term charts, weekly charts of most of the Magnificent Seven, they never really broke down. So we did see very sharp short-term deterioration, but when you look at the Alphabet or Meta Platforms or Amazon or Netflix, none of those broke longer-term uptrends extending back from 2022. So for me, I think that's a real gift. Honestly, we've pulled back into an area that makes a lot of sense. Keep in mind that technology is still going to be the profit center for 2025. We did not see sufficient earnings revisions downward to think that tech is to be avoided. If anything, it's still going to earn about 25% this year. And now valuations are a lot more reasonable. We've seen a big pullback, of course, in technology. So it makes a lot of sense at a time when the whole world is exiting the U.S., going into Europe and Asia, at a time when that actually might be ill-timed, and we should actually be considering buying dips in the U.S. And I think this large period of underperformance in the U.S. is not going to last. And now we've started a period of mean reversion and catch-up where we actually start to do much better in the weeks to come.
Yeah, Mark, how much do you take into account what Fed Chair Jerome Powell has been saying in recent weeks? We had the FOMC meeting not too long ago. He says we've got two rate cuts on the table. He's played down the potential of inflationary impacts from tariffs, and you've got your eye on banks still doing well. So how do you square all these together when you've got rate cuts still on the table?
I listen and I believe Powell when he says that the U.S. economy is not in a major trouble. And so I know a lot of people have gotten scared because of the new administration and thinking that a recession is around the corner. And I would just simply remind people that, the labor market is still in good shape, and we're still seeing, a decent level of economic strength. And inflation has actually been coming down of late. So we have seen evidence of PC deflator. And so the things that the market should be concerned about, the break-evens are down at the lowest level we've seen since December, and interest rates have dropped 50 basis points. So we're not really talking about the positives of how good it is to have rates come down and what that's going to be as a positive for homeowners and those trying to buy houses. So I think everybody's concentrating too much on the negatives about what could happen with tariffs and not really about, what is happening about, the existing policies and the good things that are happening.
Okay, in terms of data coming through, we've got the PCE index, the Personal Consumption Expenditures Index. How much weight does that play into your market approach right now?
Well, look, I'm a technical analyst, so I rarely pay attention to economic data as having too much. But I would mention one thing, that it appears like we're entering a time when good news in the economy is now going to be good news for the stock market, and that's rare. I mean, in recent months, we've almost thought that bad news would be good news for stocks because they would add additional rate cuts into the curve. And now we're seeing signs that the economy actually could be in good shape, and Powell is telling us just as much. So, I'm encouraged. I know the dollar has pulled back. That's been honestly great for emerging markets, and obviously gold and silver and precious metals are good. But I think for investors that have anything more than a 3 or 4 month time horizon, it's really right to be in the U.S. U.S. growth is going to make a big comeback, and it's going to be right to be positioned in technology.
All right, it's a pretty good snapshot of where markets are right now and how to navigate it. We've been in conversation with chartered market technician Mark Newton. He's the Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, thanks as always for your time and insights. Great chatting with you.
My pleasure. Thank you, Ryan. Have a great day, everybody.
Catch you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.